There you go. Over to you, Angela. Good luck, look. Angelina, sorry.
Hey, you're grand. Morning, everybody. How are you? So this is the credit risk module. So really the aim for this is just to get you focused on the exam, and we'll go through the two compulsory questions, question one and question two. So I'm not sure if any of you had a chance to look at the mock exam paper. If not, don't worry, or if you have, great. So what I'm going to do is I actually have the solutions for the exam paper, okay? So I'm going to share the screen and we'll go through everything in as much detail. And if you have any questions, just let me know, okay?
So can you send those results through after you finish, please, Angelina?
Sorry, Beverly, I didn't hear you there.
Can you send them through as an email?
Oh, absolutely. Yeah, I'll send you the solutions. Yeah, for sure.
Please, that would be wonderful. Thank you.
And I think I will a second. I'm getting used to the Zoom as well myself. This takes practice. Okay. So can you all see my screen there? Hopefully you can. Yeah.
Yeah.
Brilliant. Okay. So perfect. So there's no surprises on the exam paper, guys. So your question one is your trial balance. So it's you have to prepare a set of accounts, okay? So I'll just actually move this up to the top there. You can see the information clearly, can you guys? Yeah, just want to make sure that it is clear.
Yeah.
Perfect. Yep. Okay, lovely. So what is required is you're given your trial balance, you're provided with your notes, and we're looking for you to do your adjustments, your profit and loss, and your balance sheet. So this is a reflection of assignment one, you know, the question that you had in assignment one. So preparing a set of accounts. Okay. So this is like a very, I wouldn't say, would I say easy, but you could definitely do very well. You could get full marks in this if you're confident. So don't worry about balancing or different things once you show your understanding and the layout good enough as well. Okay. So we'll get going. Okay, so you'll see you have your notes over here. So what's it looking for? So it's depreciation on your motor vehicles at 20% to cost. Your fixture and fittings is 10%. Interest payable for the last quarter is 5270 to be accrued. Insurance policy. So what I would do is I'd have a quick glance through the notes first and just see what exactly are we looking for. Okay, and then the layout that I have here, the solutions, so this would be for getting full marks, if that makes sense, okay? So this is the layout here. So in the schedule of adjustments, it asks for depreciation to be provided on your motor vehicles at 20% of cost, okay? So the cost price of the motor vehicles is 43.5. So 20% of that is the 8,700, okay? So you'll have your depreciation value here in your credit, and your adjusted balance is going to be that total of 34,800. Okay, so that's the first part. Then on the office equipment, your fixtures and fittings is 10% of cost. Okay, so your fixtures and fittings is 132,000. So 10% of that is the 13,200. Okay. Your depreciation charge is the 26,000, so that has to be adjusted by the 13,200, and your total figure then is 39,600. Your total depreciation charge then for that period is both of those added together, which is the 21,900, and that will go in your profit and loss. Okay. The next one then is the loan interest paid. Okay. So the interest payable on the loan for the last quarter is 5270 to be accrued. So the loan interest paid is 15,800. 15,800 to be accrued, and your total figure is 21,070. Okay. So that is your figure. The accruals account then for the loan interest paid is the 5,270. Your rent rates and insurance then is this actually, just to read the question carefully. So it says your interest includes a new policy costing 8,000 per annum per year, and which is paid for 12 months in advance on the 1st of July. So that would be, it's for the last 6 months. So it's actually half of the 8,000. Okay. So just be careful to read the question, that it's for the second half of the year. Okay. So your prepayments, sorry, your rent rates and insurance is 21,500. It's been prepaid by 4,000. So your adjusted balance then is 17.5. Okay. Is everybody with me so far?
Yeah.
Making,
Yes.
Yeah.
is everybody clear on that so far?
Yes.
You sure? Okay,
Yes.
great. Okay, so then our prepayments account is 4,000. You put that in separately then. So you have your accruals account separately there, your prepayments account, and then your provision for your bad debts. Okay, so provision for bad debts is to be adjusted to 1.5% of your debtors. Okay, so where are my debtors here? They're 475,134. You multiply that by 1.5%. So that is 7,127. Yes, your provision for your bad debts is this figure here. So it's to be adjusted to that. So what is the difference between the two? It's 1,627. And then your bad debt provision charge for this period is the 1,627. So when you have them totaled up together, your adjustments will balance. Okay. So that's the first part, the schedule of adjustments. Are you happy with that so far?
Yes.
Yeah.
Everybody happy? Great. Okay.
Yes, thank you.
And it is clear you understand the calculations and what you're looking at. Yeah.
Yeah.
Yep.
Okay, very good. So that's the first part. And then the next, we are going to go to the profit and loss. Okay. So I don't mind if you call it a profit and loss account or if you call it the income statement, whatever, that's absolutely fine. So just if you're looking to kind of get a good mark, just make sure that you have your headings. So we have here the Jack Jones Limited trading profit and loss for year end 31st of December 2023. Okay, perfect. So with the profit and loss, I think a good thing to have in your mind is just if you know, okay, my profit and loss account, it's always going to start with your sales. Okay, so you have your sales, which is the 2,375,600, less my cost of sales. Okay, so the cost of sales is your opening stock plus your purchases less your closing stock. Okay, so the two figures together less the 150,500 will give you your total cost of sales. And your cost of sales subtracted from your sales will give you your gross profit. Okay, so that's the first part of your profit and loss. Then you're going to go to your operating costs. So you're going to subtract those. So what are my operating costs? Okay, so you have wages, salaries, 356,340. My admin expenses, distribution and transport costs. Now in the profit and loss part, this is your adjusted balance figure. Okay, so our insurance is 17.5, which is what we had here. The depreciation charge for this period, so that's your total depreciation for your motor vehicles and your office equipment. So it's this total here. Okay, so it's the 87 plus the 13.2. That's your depreciation charge there. And then the increase in the bad debt provision is the 1,627. So all of those total together will give you your operating costs. And you subtract any operating costs from your gross profit, and that will give you your operating profit, okay, which is the 525, subtract one from the other, and that will give you the 191,276. Okay. So is everybody happy with that so far?
Yep.
Okay. And then here you subtract your interest paid, which is 21,070. Let's see, your interest paid. Sorry. Yeah, your loan interest paid is your just balance there. And that will give you your net profit be that'll give you your figure there, the 170,206. Okay. So that is your profit and loss part done. Is everybody happy with that?
Yeah. Thank
Yeah.
you.
I'd say silence
Yeah.
is
Yes.
golden.
Good.
Does anybody have any questions in terms of the adjustments or what you're adding in, or you're happy with it? If you are, that's brilliant.
I
Okay.
have a
I hear a voice coming up there.
yeah. I just I have in my operating cost, I have this depreciation and fixed fee thing with 13,200. Am I not correct? Or
13,000. Oh yeah. So what you could do is I've just added the total here. So you need to add the depreciation charge for both your vehicles and your office equipment. So guys, if you put the 8,700 plus 13,200, that's fine. But you need to make sure that it's the total depreciation charge for the period. So it's
Okay.
on both your motor vehicles and on your office equipment. Is that okay?
yeah, thanks.
Okay, perfect. So that's your profit and loss. And then we go to the balance sheet. Again, just make sure you have your title at the top. And again, for the balance sheet, I'd always say, what am I going to start off with? You're always going to start off with your fixed assets. Okay. So there. So what are my fixed assets? Okay. So it's your buildings or your premises. There was nothing to be adjusted there. So that's 430,000. So your motor vehicles at cost were the 43,500, less your depreciation, which was the 34,800. And you subtract one from the other, and that is the 8,700. Okay. And then your fixtures and fittings, your cost price was 132,000, less any depreciation, 39,600, and that'll give you the 92,400. So if you total all of those together, that'll give you 531,100. That's your total fixed asset there. Okay. And then next is our current assets. So what's included in our current assets? We have our stock. Now, so the debtors here, you need to make sure that you actually include your bad debt provision. Okay. So your debtors originally were, I'll just scroll up, sorry now. Yeah. The 475,134 less your just make sure I'm right, sorry. This is practice for me as well, guys. Yeah, I have it here, sorry. 475,134 less your adjusted figure, which is 7,127, and that'll give you 468,007. Okay. Then what is your bank? 7,852. Your prepayments, which was your insurance policy for the second half of the year, which is 4,000. So your total current assets then comes to the value of 630,359. Then you move on to your current liabilities. So that is your creditors. There's no bank overdraft. So here for the mortgage, it'll be for the first year, which is your current liability. Okay. So that is 30,100. Your accruals account, which is the loan interest that was paid, 5,270. And then the tax payable, 84,075. So your total liabilities, you will subtract from your assets, and that'll give you 180,700. sorry, 180,706. Okay. So then when we add those two together, so it's your total fixed assets plus your current assets, and then you're going to put under long-term liabilities here the remaining mortgage, which is the 9 years. Okay. So that is 270,900. You'll subtract that from your figures here, and that will give you your net worth, which is 440,906. Okay. And then finally, you're financed by, which is your capital, your retained profits, and your net profit for this year, which is 170,206. This is the figure that you got here. You add those together, that will provide you with your net worth. So both of those are balanced there. Is that okay?
Angelina,
Yes.
can
Who's
I just
that?
ask, the way sometimes the bank can be a debit and sometimes it's a credit balance. How do you decide which it is? That's the one that always confuses me.
The bank, is it?
Yeah.
In your adjustments, or
Do you know when you're doing is it the balance sheet? It could be a debit or a credit balance. Balance sheet.
Yeah, maybe
in the
Anthony,
bank.
I'll jump in there if I
Yeah.
can, because I'm here in the background. Yeah, the simplest way of doing that is look at your trial balance and look and see where your you're going to trial balance. So
Yeah.
so if we look there, see the column that the bank is in.
Yeah.
So the bank column is there, 7852, and just look up and see, is it on the same side as your debtors or your creditors?
Okay.
Right. So if it is on the same side as your debtors, that means it's an asset and it's money you have in the bank. If it's on the same side as the creditors, that means it's money you owe and it's an overdraft you have in the bank.
Lovely. That's it. I just wanted a simple way to, because I was getting bogged
Yeah.
down in that.
Yeah,
Thank you.
and you can do it. So that's all you have to do. Just look and see what column is it in. Is it the same as debtors? Is it the same as creditors? If it's debtors, it's an asset, it's money I have. If it's the same size as creditors, it's a liability, it's money I owe.
And that's in the that was in the trial balance, was it?
That's in the trial
Yeah.
balance. So look and see what column it is in the trial balance. And again, when you're doing it, if it's an overdraft balance, you can either put it as a minus in your current assets or as a plus in your current liabilities. Either will be correct. Yeah.
Perfect. Thank you.
Okay, that's grand. I'll
Okay.
jump back out now, leave it to you. But I'm here if you
That's
need
fine.
me.
Yeah. Okay, so that's your that's question one there. So is everybody happy with that?
Yes. Thank you.
Yeah. So I think if for me, I know that would be, if you're confident enough, I would get that question done and give yourself kind of a bit of relief. What I used to do is I used to use flashcards. So
Sorry, Angelina, can you just
yeah.
scroll to the end where the financed by is, just to
there you go.
it went so it disappeared. So
Yeah.
the long-term liabilities there, you take the rest of the mortgage off, is it?
Yeah, that's correct.
Okay,
Yeah.
okay. Yeah. Sorry, I missed that bit.
No, you're absolutely fine. Yeah.
I'm writing
question
writing
already,
mad.
Yeah, well, guys, I'll be sending you the solutions, and I've added little notes here as well, even for myself when I'm going through things. So, hopefully that'll make things a bit clearer for you, will it?
Yes.
Okay.
Can I
Yeah,
have a
it's perfect.
question, Angelina?
Sorry, is that talking?
Angelina, can I have a quick question again about the current liabilities about the mortgage?
Yeah.
Because I put the mortgage, the full amount, and not in the interest. I didn't. First is I have. I multiplied the 301,000 by divided by 10, and then I got the 270,900. Is that correct? And then I put the 270,900 into the less long-term loan bracket, they are down, not but the interest. So that's why I have a different answers. I just very confused about as which amount I'm going to put in the place where the current liabilities are.
Yeah,
And then
so
down
your
there-
current liability, so you're focusing on it's for the year. So the mortgage is going to be year one. So that's the 30,100.
Mhm.
And then you'll put the rest of the mortgage, which is your long-term liabilities, which is the remainder 9 years. So that's the 270,900. So you'd put it there.
Okay. So that's in the 9 years, and then over on the where the current liability is the 30,100. This is only for 1 year.
It's for the 1 year, for the current
Okay.
period. You're doing it just for the 1 year.
All
Is
right.
that okay?
Thank you.
Okay.
Angelina, can I ask a quick question?
Yeah, Beverly, yeah.
It's,
Oh,
no,
see
it's
it.
not that bad, actually, honest.
You're
see-
grand.
You see, when you know the way you have got the question one there, showing us the
Yes.
question, when you're going to put it into your spreadsheet for the exam, do we
Yeah.
just open up another tab beside it, or will there be a
Absolutely. Yeah, whatever suits yourself.
and then
that's
just
what makes
insert
them-
it out of the tab and work between the two tabs?
Yeah, absolutely. Like, so to see what I have done here. So I have, say, section A, question 1. I've actually included the adjusted trial balance for you, but don't worry, folks, you don't need to do that. You won't have time. So certainly question 1, if you want to put in your answer here, insert it there. That's absolutely fine.
No, I just wasn't sure what way you wanted it done. That was all.
Whatever, yeah, once it's clear and I can see that you've actually included your questions, your answers in the submission, that's absolutely fine. Whatever's easiest for yourselves. So yeah, I would actually recommend just inserting it here.
Inserting a tab
Yeah.
and just adding yours beside the question to make it easier.
If that's easier, whatever works for you guys, yeah.
No,
Once
thanks,
you have your answers included, you know the way, or just keep things simple for yourselves,
Thank you.
Okay, great. So that's question 1. And it is an open book exam. So actually, I remember when I was doing it, I actually had flashcards. So I would have, what is my format for my profit and loss? It's sales less cost of sales, gross profit, your operating costs, your tax here, that kind of way. So you have that format in your head, and you just literally fill in the figures. And then the same for the balance sheet. What am I starting with? It's going to be my fixed assets, current assets, any liabilities, your net current assets, and then finance by, and then hopefully that you'll balance. Is that okay? So I think that question kind of will give you a bit of confidence, and don't worry. I know sometimes you can be nervous or different things. You might miss a figure. Once you show that you have the layout, that's you're halfway there. Okay. And obviously stick to your time, as Declan said. You only have 40 minutes, so it's very easy to get bogged down and go, oh God, maybe I haven't done this figure right. There'd be no harm actually if you tick off your figures in the trial balance, so okay, have I dealt with this figure? Have I dealt with that figure? So you know that you've included everything. Okay, I think that might have been said before. So you go, have I dealt with my mortgage grant? Have I dealt with my admin costs? Highlight it for yourself, maybe in red or something like that, just so you know you have everything ticked off. Okay. And then your question 2 is the reflection of your second assignment. Okay, so that is your ratios. So just remember, you don't need to remember the ratios off by heart. You will be given them in the mock exam, so they'll be listed here like that. Can everybody see the ratios there? Yeah.
Yeah.
So they'll be provided.
Angelina, I just found some of them confusing in that when I looked through them in the notes, it was telling you what the average maybe would be, but it wasn't telling you, should you be aiming for it to be higher or lower? Like some of them were a bit confusing. I was just guessing that, I know like I made some mistakes in the assignment, but I was just guessing some of them because I didn't know, like, should it be, which one was better than the other, because it wasn't very clear in the notes on a lot of them whether you were supposed to be aiming for higher or lower. It was just telling you what the average was.
Okay.
Yeah, maybe Angelina, if I can jump in there.
Perfect, Declan. Yeah.
If it is something you like, then the higher the number is, the better. All right. So if it's something you like, so you like, you know, liquidity is something that you like. So the higher the current ratio, the better it is. Is that okay?
Yeah.
When it comes to debt, the higher, we don't like debt. So the higher the debt is, the worse it is. The higher your DSOs are, the worse it is. So if it's things that you want, the higher the number, the better. If it's things you don't want, then the lower the number is, the better. Does that help?
Yeah, like I get that, but some of them from the wording I didn't know. You know, I can't think of an example right now, but some of them had me very confused. I just think maybe for the next round of people, maybe you might want to look at those notes and just maybe try and find a different wording or something, or just try and explain it out a little bit more. It just seems like it's not fully explained. Maybe it's just me. I don't know. Maybe nobody else had a problem. I found it. I found it.
I have a problem as
hard.
well to understand. You're not alone.
Okay, it's not just me.
No, same here as well.
I'm so confused as well.
I spent a long time trying to figure it out, and in the end, I was just guessing some of them.
Right. Yeah. Well. Hopefully, by remembering whether it's something you like or something you don't like, that hopefully will make it clearer when it comes on the day. I hope. Yeah, but we certainly look at it and take it on board.
Yeah,
so we want to make it as easy as possible for people. Yeah. Okay, back to you, Angela. Sorry, Angelina.
Yeah, no problem. Okay, so we go on to our question 2 then. Just minimize that. So that's your ratios there. Okay, so what exactly is it looking for? So it'll show you an extract of your final accounts for a company over 3 years. Okay, so you're required to calculate 6 ratios of your choice for each of the 3 years. And this should include at least one ratio from each of the following. So your profitability, liquidity, and your management. Then you'll just write a short comment on each of the 6 ratios. And then based on the ratios that you've chosen, you'll state whether the company is to be low, medium, or high risk, and whether you'd extend 50,000 in credit. Okay. So as I mentioned, you're going to be given the ratios in the exam. So it's up to yourselves what ratios you choose, but just for guidance and for heads up in the exam, I've highlighted the information here. So under our profitability ratios, I've chosen gross margin and the operating profit. Okay. So
Angelina, quick question.
Yes.
Show me where they are on the ratio page that you sent us through on the example, because I don't have all of those.
This here?
Yeah. You see the way, the way you have the gross margin and the operating profit?
Yeah.
On the very end of the summary that you sent us, there was a list of ratios, but not all of those are on it.
Are they not? Okay. Perfect.
Or is it me I'm just missing? Sorry.
Perfect. I'll send them on to you then. Is that okay?
Yeah. So do we have to work out the gross margins and the operating profit figures? Do we need to work out those percentages?
Yeah, so you whatever you choose. So as it says, calculate 6 ratios of your choice. This is just a guideline of what I've chosen. Now I have all the calculations there, so you'll see if your sales growth, gross margin, operating profit. That's just obviously for your solutions. And then what am I actually going to choose under the profitability, the gross margin, the operating profit? Then under my liquidity, I'll choose the current ratio, and then your liquid ratio or your acid test. And then under your third type, it's your management efficiency ratio. So that would be your debtor collection period, creditor payment, your stock turnover. Okay. So like you can choose any of the ratios there and calculate them out. You show your percentages and then write a short comment on each one. Is that okay?
Yeah.
Is everybody happy with that then?
So the liquidity ratio, then the 1.5 is the best one.
Yeah. So you see that it has improved over the 3-year period. So 1.2, 1.3 up to 1.5.
Okay.
And then your liquidity or your asset test, you'll see there that it's gone from 1.0 to 1.3. Okay. So
And
just
to be honest, Angelina,
yeah,
the 6 that you have chosen there are the 6 that I would choose. I think the 6 you've picked, and from a practical perspective, and in the real world going forward, those 6 ratios will tell you so much about a business. You know, and if you get accounting books, there's 5,000 different ratios. Those 6 will tell you everything you need to know about the business. Are they solvent? Can they pay their bills? Are they well managed? They are the ratios, and the ratios is literally just a formula. So when you know, just go to your gross profit percentage, which is, you know, your gross profit divided by sales multiplied by 100, and then you just slot in the numbers from the information you're given and do the sum. So it's literally just taking the numbers and doing the sums. And then I say the line, the commentary shows that you understand what you're doing, which is important. So they're the 6 that I would pick, and that tells you everything you need to know about a business.
Yeah, Louise just has mentioned there's 7 highlighted. Okay, yeah. So really it would be the gross margin, operating profit, current ratio, liquidity. I included the stock turnover, but your debtors and your creditor, the collections payment, they would be 2 that I'd focus on. And I just added the stock turnover.
The stock, yeah.
Yeah. Is that okay?
Yeah, sorry, I see Edwina's coming in. Oops.
I've admitted her there, yeah.
Yeah.
Would you like to give an indication of what are the likes and what are the not dislikes in those on those 7 then?
Yeah, okay. So sales growth is something we like. So the higher that number is, the better it is. Gross margin, yeah, we like profit. We like gross margin. So the higher that is, the better it is. Operating profits, yeah, we love operating profits. So the higher that is, the better it is. Costs, we don't like costs so much. So the lower the costs are, the better we like it. So that's a lower one. Net profit, we love profit. So the higher the profit, the better it is. Interest, we don't like paying interest. So the higher your interest is, the worse it is. Creditor to net worth, that's I don't know.
See, that's one that I didn't understand what
and I don't really know what. I suppose it from a financial perspective, it's kind of looking at how much of the business is financed by the creditors, if you know what I mean. So you can see that, you know, that this is what the business is worth, but sure, the creditors are owed an awful lot more than what the business is worth. So it just gives you an insight into how much of the business is owned by the company and how much is owned by the creditors. So obviously, if our creditors own less, we don't like that. So in that case, the lower the number is, the better. So the lower that number is, the less hold the creditors have over your business. But look, it's one of the peripheral ones that we just threw in for the hell of it. Current ratio, obviously, the higher the better, because we like liquidity, and to me that's a key number. So if it's less than 1, it means, like, current in accounting terms is anything that has to be paid within a year. So your current assets is stuff you'll turn into cash within a year. Current liabilities are bills you have to pay within a year. So that's why we split out the long-term loans between current, what has to be paid in the year, and long-term that has to be paid beyond that. So if we have you know, our current ratio, the higher that is, the better it is. And if it's over 1, it means that we have enough in our current assets to pay our current liabilities. So the business is solvent. If it's down at 0.7, 0.8, that means if it's 0.8, it means I only have 80% of the money available to pay my bills when they fall due, and that can cause problems going forward. Liquid ratio just takes the stock out, because stock can be slow and to get rid of, and we have to discount it if we want to turn it into cash quickly. So it just says what's the reliance on their stock. So that's that, and obviously the higher that is, the better it is. Yeah, you've just gone down. I just, if you go back up, Angelina,
Yeah,
I'll
perfect. Yeah.
just go through the last few there. Yeah. So now, so that's your liquid. So the higher that is, the better it is. Stock turnover period. So again,
Less is faster there.
less is better, because we don't like holding huge amounts of stock. That's a good. Debtor collection periods, your DSOs, the lower that is, the better it is. All right. Now, the next one, the creditor payment period. This is where there's a bit of a delay.
Yeah.
So if you're talking to your accountants will tell you that the higher that is, the better it is. So, because what that means is that's money, supplier money that you have in the bank, and the more money that you can hang on to, the better it is. So accountants will tell you that the higher the creditor figure is, the better it is. We're going to tell you the opposite, because we're looking at this from a credit control perspective. And for me, I like companies who pay their bills on time. Are you with me? So accountants like to have money in the bank. I am a credit guy. I like to deal with companies who pay their bills on time. So this is one where, you know, I suppose either answer is relevant if you explain it. From my perspective, you know, the lower that number is, the better it is, because I love people who pay their bills on time. And if I see a low creditor payment period, I like these guys, I'm happy to do business with them. If I see it's high and it's rising, these guys are at it, they're hanging on to money as long as they can, and they're not the type of people, you know, I want to do business with. So that's a thing. I say accountants will tell you the higher it is, the better it is. In my world, and in the world of credit, the lower it is, the better it is. You know, you can make up your decision. Cash operating cycle. Yeah, you've got me brain.
Yeah, that's one that I didn't know. I didn't understand whether it should be higher or lower.
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 And I'm not going to confuse you now either. I have to think about that. Return on capital employed. Obviously, the higher the returns you get on your capital, the better that is. So we like that. Sales per employee, the higher that is, the better it is. And the net profit, the higher it is, the better it is. Let me, while Angelina's going through the next bit, maybe I'll. Well, it's almost time. Let me look at cash operating cycle. I need to go back into the formulas, because I do understand this stuff, but sometimes I don't want to misguide you either. So let me see how that's calculated, and I'll come back with an answer before we're finished. Is that okay? But
Thanks.
again, just remember that you don't understand the cash operating cycle, guys. It's 6 of your choice. So if you don't understand it, don't pick it. Right, so it's not that it's
but if you get a question on the ratios comparison, and you're asked to compare, you know, on one of the other questions.
Yeah, I know what you mean. Yeah,
that, you know, it doesn't just fall into this one. This one is easy because you can, like you say, you can choose the 6 that you're confident in.
Yeah.
But it's just, if you get it in a different context in another question, it's just to be able to understand what it is.
Yeah. That's grand. No, I will add to my knowledge now today. So let me do that. Cash operating is better the lower it is. Thank you, Sinead. Straight to the top of the class. The lower it is. So yeah, I need to get my head around that. But yeah, I will accept it. Thank you. I still need to get my head around it though. Okay, in terms of understanding what it is. So this question 2, yeah, there is a lot of sums to be done. There is a lot of calculations. So if you're looking at 3 years, 6 ratio, so it's 18 sums that you have to do. And less money, less time, money tied up. Yeah, you're right, Sinead. Thank you. Yeah. Yeah, and obviously because in credit we're about cash flow, so the faster the money runs through the business, the better it is all round. So yeah, absolutely makes perfect sense. So if your money is clogged up and tied up and it's moving through the business slowly, then that's going to have a stagnating effect. The quicker the money runs through the business, the better it is all round that we keep the cash flowing. So yeah, so your cash operating cycle is from start to finish. So yeah, I've got that. What else was I going to say to you there? And in terms of a line, just now in terms of the line, we don't want you to tell us, gross margin is, gross margin percentage is the gross margin divided by sales, because we know that we've given you the formula. We want you to comment on the numbers. So last year the gross margin percent was 15, this year is 22. So they are, the gross margin is growing and the business is more profitable. So you're commenting on the not the ratios themselves, but on the numbers that you've created and the implications for the business. So that's the important thing there. So you have
the overall picture. Yeah.
Yeah, gross margin has increased, which is a good achievement, particularly as there appears to be no loss in volume of sales. So yeah, so that kind of just shows that you understand what gross margin is, and you're able to, like, if gross margin is falling, either your cut pricing, so you're reducing, so your purchases are the same and your sales price is coming down, so your cut pricing and your margin is hit, or else your suppliers are pushing up their prices and you're keeping your prices as they are, so your margin is being squeezed. So by looking at your gross margin, seeing is it rising or falling, and then looking at to see what's causing that, you can pinpoint problems within a business. And to me, a falling gross margin, and this in the real world, is usually a precursor to financial problems down the line. So you might see the gross margin falling for a couple of years, and then year 3 they get into trouble. So it just gives you a sort of heads up when you know what you're looking at to help you make better credit decisions, which is what this whole course is about. Sorry, Angelina.
Yeah, no, you're absolutely fine. So you do your calculations for your ratios, and then within each category, so with the profitability ratios, we discussed the gross margin there, the operating.
Yeah.
And then in terms of the liquidity, so I've chosen the current ratio. So it's literally a short comment. So we see that the ratio has improved over the 3-year period, and it's at its highest in the latest year. So we'd say that the company is in a good position to finance further expansion in sales activities. It also indicates that the company is financially healthy and has all its debts well covered. Okay.
And Angelina, sorry, just click into that number 1.5 there in the current ratio. Yeah. So when you get these answers, you can see that it's not actually 1.5, it's a formula. So if you're going through these answers, those numbers will tell you where the number came from. Are you with me? So if you don't know where did they get the management efficiency ratio of 19.5, just click onto the number. You'll see the formula that we use to get the number and where that number came from. So you go to cell C63, and that's where the answer is. Is that okay? So just to clarify that. Sorry, back to you.
No, you're grand. And then within the liquidity ratios, so the liquid ratio or the asset test, so we see again that it's improved each year, despite significant investment in fixed assets, which will have impacted on cash flow and available funds. And I just have written it's primarily due to major improvement in creditors. Okay. Grant. And then, so overall, the liquidity remains strong, making the company a low risk. Okay. And then in terms of the management efficiency ratios, so really, I think Declan, you'd be focusing on the debtor collection period here and the creditor payment period. Yeah.
Yeah, and then just before we move on, actually, I just see
Yeah.
Virginie has some questions there in
Oh,
relation
yeah,
to
perfect.
the,
Yeah.
the ratios. So it says, will the ratios be readily calculated? No, you will have what the ratios are. So you'll have the
The
formulas there.
formulas.
You'll
Yeah.
be given the data, and then you have to calculate. So in this question where it says pick 6 ratios of your choice and calculate for the 3 years, that's 18 sums that you will have to do. That is the exam, if you know what I
Yeah.
mean. So
So you're
you'll have
provided
to
with the
calculate.
information here,
Yeah,
and within that, then you'll whatever ratio you choose, you'll have your formula and you'll calculate it from
So
the information that's provided here in the first part.
exactly. So
Yeah.
in question 2, you have to calculate the ratios. If it's one of the shorter questions, then you'll be given the ratios, from a scoring perspective. We don't expect you to do 100 sums in 20 minutes. So
No.
so you'll be given the ratios in the short question, and you just score them. In this question, you have to work out the ratios.
So you have your 6 in total, 3 years, and as you mentioned, it's 18 ratios in total.
Yeah.
Yeah.
Yeah, 18 formulas. And you
18
have 40
sorry,
minutes. Well, you have 40 minutes to do that, but yeah, you should do that fairly quickly.
That's your question 2. Yeah, they do have 40 minutes for question 2, isn't it, Declan?
Yeah. So, but again, there's so if you go down to the question, there's 3 or 4 different parts.
Sorry,
in the
yeah.
question. So it's calculate the ratios, write your comments, so and again, when you're looking at your question and you're allocating time, just allocate your time in proportion to the marks. So if you get 40 marks for part 1 and 10 marks for part 2, then you spend 4 times more time on part 1 than part 2. So in terms of your job in 2 weeks' time is to maximize the number of marks that you get. And as I say, all you need is, what, 28 out of 70 in order to pass the exam. And when that's added to your short tests and your assignments, you've got it.
Yeah. And Virginie's just asked, so it's mostly analysis, isn't it? So
yes. Yeah. So you have to do the sums, and then you have to say why or what. Yeah. Because this, even though I know at times it might look like an accounting subject, because it's a credit management diploma, we're more focused on the understanding of the numbers and what those numbers tell you and the story they tell you about the business to help you make better credit decisions. That's really what it's all about. Yeah.
And just for the purpose of going through this, like it just asks you to write a short comment, so that could be 1 or 2 sentences. Obviously, I've just given you more detail, guys, just for examples of the type of wording, what you could do, give you a better understanding. So say here for the management efficiency ratios, I've chosen 3, and then I've gone into more detail here for you in terms of that they show significant improvements in the latest year. Okay.
Yeah.
But really for that part, if you just 1 or 2 sentences, fine, and then just make sure you answer question C. All of the ratios in the latest year indicate that the company can afford to take on further debt beyond the 50k credit line, and you'd say therefore you consider that it's a low risk for this amount.
Yeah.
So that's the question 2 there. So you'll do your calculations. You'll list out the different ratios, the 2 gross margin in each category. Write your comment, and then state whether they be a high, medium, or low, medium, high risk, and whether you'd provide them with further credit.
Yeah.
Is that okay?
Hopefully
that.
Yeah, I think so. Guys, look, it's question 1, you just put the numbers from the trial balance, which gives you no information at all, into the prescribed format, so we could see if they're profitable or solvent and all that good stuff. So it's literally taking the numbers, putting them into a trial balance, and then making sure that you get your adjusted figures. Just the last thing I'll just do, because I know inside each of you is a perfectionist waiting to get out, even though we know we can never and will never achieve perfection. If you get to so you do your balance sheet, you have your fixed assets, your current liabilities, your long-term liabilities, you add up all of them, you get a figure, then you do financed by, capital, retained earnings. Remember to put the profits from this year into that as well. And then you get two numbers. So they will either balance or they won't balance. All right. And I would say in probably 80%, they probably won't balance. And not to panic when that happens. If you do have time available, right, there are two things that you can do. Number one, just spot the difference. Get the difference between the two figures in your balance sheet. So what you do is you just subtract one figure from the other. Okay, so my difference is 15,000. So the first thing that you do is look through your trial balance to see, is there a figure for 15,000 that I missed? All right. So that's your first port of call. So my difference is 15 grand. Did I miss something? And you go and say, oh, look, there's 15,000 in stock. Ah, look, I never put stock into my balance sheet. God. And then you just slot it in and it's done. Okay. So that's an easy one if you just leave out one figure. If there isn't 15,000 there. So now what you do is you divide your difference by 2. So if your difference is 15,000, you divide that by 2, you get 7,500. And look and see, is there a number for 7,500? And you go, ah, look, there's a bank figure there, 7,500. Ah, look, I added that and it's an overdraft. So by dividing it by 2, that's where you've added a number that you should have subtracted. So you go, ah, right, so it's either there in full, you divide it by 2, see if you can find that number. I've added that. And the other thing that happens is if the difference, so you get a difference, and the difference is, say it's 18,000. If it's something like 18,000, where it's clearly divisible by 9, all right? So if the difference can be divided by 9, what that means is you have transposed a number. So you put in 25 instead of 53. Are you with me? And we're all capable of doing that, and particularly in the stress of the exam. So if you transpose a number, so you put in 42 instead of 24, then your difference will always divide by 9. So that is just 3 quick ways of finding a difference if you want to find the difference. If you have your profit and loss account done out in the proper format, your balance sheet done out in the proper format, and it doesn't balance, you will still get most of the marks. So we will give you marks for everything you get right, and we will deduct a mark for everything you get wrong. So the fact that it's not perfect, perfection is 100% is a distinction, and even think about it, even 81%, which is not getting everything absolutely correct, is still a distinction. All right. So, please be nice to yourselves. And if it doesn't balance, boo-hoo, move on.
Yeah.
Yeah. No matter how far it's out, just do the format of it. And if it's something obvious, well and good, and it's within the 40 minutes, well and good. If it's not, and you're a mile out, there's no problem. What we want you to know is where everything goes and what everything means. That's the important part. Okay, I'll stay quiet now.
No, you're fine.
Any final words of wisdom now in the last 4 minutes?
Yeah, so obviously your question 1, question 2, which are your compulsory questions, okay? And then you have 2 other choice questions. So really, Declan, I would think for my own point of view would be what you got in your first assignment was your bad debt provision. Okay, so that would be a choice question that I would go with. So it asks you to prepare your schedule of recoverable, unrecoverable debt, suggest an amount which should be provided, specific and general, and then briefly explain your recommendations.
Grant, and just to clarify that, specific is where you can identify a customer and a balance. So you can have a specific provision for your your 3-month column. Yeah, if that's what the way you want to go. So specific means you can identify it to a specific customer. A general provision is just, we're going to take 1% of our debt and put it into a provision because we only got 99% of our collection rate last year. So that's a general provision that, you know, where we can't allocate it now to specific balances. And it's kind of arbitrary. And, you know, I suppose in the real world, what I would recommend is the higher the provision you can maintain within the business, the better it is, because it just gives you a bit of wiggle room in case something does go wrong. And guys, you know, all the indicators for 2024 is it is going to be a difficult year from a credit perspective. So we have to have our eyes open. Okay. So
And then
that
if you don't feel the bad debt's your area, you still have question 6, with your scoring module, and then question 7, which is
the ratio comparison.
the ratio exactly in your second assignment that you had. So that would be the ones that I would be 5, 6, and 7 would be the choice questions that I would go with.
Yeah. And that's the information that's given, and you just do your 0, 1, and 2. And look, you know, you so if there's 10 of them and there's 20 marks for that question, you get 2 for each one you get right. So if you get 8 of the 10 right, you know, you've got 80, you know, 8 marks out of 10, or, you know, 16 out of 20. So you know, again, it's not about perfection.
Yeah. And you'd be just given 3 companies in question 7. You had 5 in your assignment, so just don't panic.
So again, you have 20 minutes to do that. Right, it's almost 11:30. I see Paul has joined us just in time for tea. So if you want to stop sharing now, we can get to see people.
Yeah,
that's great. So guys, will you go, if you have any questions, stick them in. So I'm going to stop the recording now. Stop recording.